What's up, everybody? At the time of this recording, I am a shareholder of Tesla stock. Today, I'm going to talk to you about Tesla's recent stock drop, its overall performance, and whether or not I think shares are currently a buy, sell, or hold, and what I plan to do with my own position. This is not advice, it's just my thoughts on the stock, and I'm a real-world owner of Tesla shares. I have a $8,100 position in Tesla. In total, I've put $10,758 in, so we are currently down $2,639. You can see I own 41.75 shares at an average share price of $257. And so we're currently at about 196. And so you could tell I'm down on the position, right? What we have to think about now is, does it make sense to continue owning the shares based off all of this news that we have, the Twitter news, competition, logistics issues, China shutdowns? Is the stock overvalued or undervalued? And am I going to buy, sell, or hold? If this is your first time watching the channel, I'm Austin. I share my portfolio very transparently. It's a $120,857 portfolio. And so far, we are down $11,746. Started it February 15th. At the end of this video, I'll show you every position in my portfolio very transparently, but I want to get to the Tesla analysis first. Okay, so Tesla is just one of the most polarizing stocks, right? We've got Elon Musk, for one, who is one of the most polarizing figures and has been hugely beneficial to the stock, but also a very big liability, as we've seen many times. And the stock is still down 51% year to date. But what's crazy is that even with this crazy drop, since its IPO, it is up 16,600%. And just to give you some perspective in like real dollar terms, if you would have invested $10,000 in Tesla when it IPO'd in 2010, 12 years later, that $10,000 is worth $1.5 million for a 49%, 50% compounding annual growth rate. One of the best performing stocks over the last 12 years, bar none, right? Even with its crazy drop. Anytime I look at a stock, I want to see what the actual numbers are, right? We have this whole story with Tesla, but let's see if they are doing well with their earnings and revenue growth, if they have beat analyst expectations, if growth is slowing, or if they're missing expectations, right? And what we can see here is basically the company's history since December 2017, right? Everything green is a beat. So from looking at earnings per share, they have only missed 1, 2, 3, 4, 5 times on adjusted earnings per share since 2017. Pretty awesome track record. When it comes to revenue, they have missed 1, 2, 3, 4 times. So fantastic track record. The problem is are we seeing a turn where they're going to continue to miss on estimates? All right, so we're looking at the call transcript, right, from their last earnings conference call, and Elon Musk came out swinging. He said Q3 was another record quarter on many levels. Industry-leading operating margin hit 17%. Free cash flow surpassed $3 billion, approached $9 billion over the last 12 months. As factories ramp, we're looking forward to a record-breaking Q4. Knock on wood. Looks like we'll have an epic end of the year, so Q4 is looking extremely good. That was Elon Musk's perspective, right? So now I'm using fast graphs to look at some of the historical data of Tesla, right? And this chart doesn't make any sense, but what I want to show is operating earnings growth, right? We can see all the way through 2018, they were negative in terms of earnings per share. Since 2019, they've been in the positive, and they've actually grown from pretty much $0 per share in 2019 to estimated of $6.96 in adjusted EPS per share out to 2024, which is just extreme growth. Now, we're going to look at price to sales ratio. The current price sales ratio is showing as 7.59, which is way below its average of 16 over the last since 2019. But what we need to do is just get a better idea. I think that price sales ratio is too high. So I've taken it out, I've put in, we've got the analyst estimates here. For 2022, estimates of 67% sales revenue per share growth, 23, 41%, 24, about 27%, and then I've put in 20% for the next 3 years. And so what we can do is we can say, hey, if Tesla continues to trade around a price sales ratio of, let's say, 7, right, out to 2027, then you're looking at a total return from now till then of 203%. The share price at that time would be $578 for 24% a year. That would be an amazing return. But let's say that we're confident Tesla's going to hit these sales numbers, or maybe they're going to miss the numbers and we just need to bring the overall price down. let's say the price to sales ratio is only 3.5, which is down about 50% from here. We're at 7.59 right here. So out to 2027 with a 50% reduction in price to sales ratio, you would still get a 51% total return for an 8% annualized return. For me personally, I like that risk reward, right? I get that Tesla's volatile, it's risky. I like seeing that the sales estimates are out there. They're expected to continue growing strong. They are a leader. They have some optionality with new products coming online, whether it's Optimus, whether it's solar stuff, whether it's full self-driving to get more recurring, higher margin type revenue. And so then if we're saying we could take a 50% reduction in price to sales ratio and still make almost 9% per year, but then we get upside to, even if it just stays and actually drops a little bit from its current price to sales and gets a price to sales ratio of 7, if they hit these sales numbers, you still have, upside to 203% return. I'm totally happy to continue owning shares. Now, one thing I want to offer you is just more insights than just my own, right? Here's what Morningstar thinks about the stock. They call it undervalued. It's at a 24% discount to fair value. They give it a narrow economic moat, exemplary capital allocation. And we've got updates as recent as November 9th, right? They said they're maintaining their $250 fair value estimate as SEC filings reveal Musk sold shares. Tesla stock is undervalued. Okay, he did that because to finance that Twitter deal. And anytime somebody sells that much of a company or that many shares, it's going to negatively impact the stock price. And it says that, that put downward pressure on the stock, down 11%. And basically it came down to this, right? They view Tesla shares as undervalued. They think the market is concerned that a near-term global economic slowdown will hurt demand for Tesla cars. However, given the company's relatively small volume base of 1.2 million deliveries, we think it's likely still room to grow considerably, even with an economic slowdown. We forecast Tesla to deliver 1.4 and 2.1 million vehicles in 2022 and 23. For context, 2023 deliveries forecast is still below luxury automotive peer BMW. Given that all 4 of the company's models target the luxury auto market, we think Tesla's deliveries are less likely to be significantly affected in an economic slowdown, as luxury goods in general tend to see demand hold up better. So if you believe in Tesla, you believe they're a market leader, you believe they're going to continue to sell vehicles, and you like the optionality and the upside of the new products and product lines that are coming to market, which I do, then I believe right now is an opportunistic time to dollar cost average into Tesla. And that's exactly what I plan to do over time, is keep building the position out. I promised you I'd show you the entire portfolio, and wow, we have had an awesome week. Up almost $18,000, up to $121,000 if you've been following. It's been a tough period of time. I share the down days and I'm sharing the good days too. And we'll just go biggest returns for the week, right? Percentage wise. Cloudflare is up 29% for me. GitLab's up 26%. Meta's up 25%. What a quick turnaround so far for them. Shopify's up 24%. Mongo Database 22%. Snowflake, Bill.com, Taiwan Semi, Datadog, CrowdStrike, Rocket Lab, Mercado Libre, and Tesla's the only one that's down for the week. A lot of this because of selling pressure. That's my thoughts. Let me know what you think in the comments and if there's any stocks I should be considering for my portfolio.